So I would like to kickstart today's conversation by quoting some numbers from the recent BCG Fintech report, where the report highlighted that by 2030, the fintech market revenue could rise up to 1.2 trillion. And one of the key indicators of that report was embedded in finance will unlock close to $320 billion of worth of revenue worldwide. So with this particular context, I would like to kickstart today's conversation and would like to start with Bhushan, you first, and get your views on how do you see the current investment theme broadly playing out, given the fact that we are already moving into high interest rate environments where the cost of raising capital is going high, and there's a bigger push from investors on startups to move to profitability and do not chase growth at any cost. So your views on that, the entire investment climate with respect to fintech?
Yeah, can you hear me? Okay. So just to talk, I can talk about VC perspective, I think, because everybody from different fraternity, I think they should definitely contribute, but what possibly investment fraternity is looking at. While I think last maybe, we are in a, I call it as a third era of fintech innovations. We had a BFSI, then we have digitization, where a lot of value created in migrating the traditional plays into digitization. And now is a time to kind of get into fundamentals. But at the same time, there's also opportunity of kind of looking at generational changes which are going to happen, which are, and we call it as more like an India first fintech innovations, which has just started happening. But talking about, I think, two points, what you just said. The first point is what investors are looking at today in the current fintechs, which are, I would say, from zero to, let's say, series A, B kind of stages, is where, and there are different themes, right? Because fintech is a very vast topic, because there's B2B, B2C, cross-border, there's infra, so everything comes into, but I'll try to give a flavor of things. One, definitely is profitability. One, and that's why this is important today is digital fintech industry is almost like almost 20 years old in India as of now, right? Almost like this, 25 years old for that matter. And now people are started asking, where is the money? And fundamentally, most of the fintechs thrive on a smaller take rates. And at the same time, digitization is playing an important role, but it's still in a single digit or some cases double digit, right? InsurTech, for example, it's still single digit, etc. So fundamentally, I think that's first important thing. Second one is people are also looking for, do you have an embedded distribution in your innovation? Rather than, would I be taking my money to distribute what your innovation is, right? Is there a fundamentally, the product itself has enough network effect in it? And to some extent, people are finding solutions in either embedded finance or riding on some third-party strategy or going B2B, B2C kind of models. If you look at last 5 to 7 years, many fintechs are using B2B, B2C kind of channels, whereas anything before 2015 was B2C, spending lots of monies to kind of get to consumers. That's the second theme. Third theme, I think, definitely from a opportunity cross-border, it's coming big because especially the new, I would say, set of consumers are born global. Everybody today, for example, in this room will have something to be bought with credit card internationally. I think the fourth pocket, coming to the new little bit going further, where we are seeing larger opportunities, India first innovations. Now, when I say India first innovation is basically, if you ask, like the entire, any product of the BFSI industry and ask, will Gen Z or the next generation consume the product in the same way what, let's say, Gen Alpha or millennials consume? Most of the times the answer is no. Look at the insurance. Would Gen Z look at corporate to give them insurance, or would look at some, basically going to some agent or a DSA to buy products like this? Possibly the answers are no. So what we are calling a generational shift kind of plays, which is a large pocket where the India-led innovations would come into picture. How the fintech, every fintech product, starting from cross-border, escrow, B2B for that matter, the new age of family office, etc., how they're looking at fintech is going to be a larger opportunity is what I feel. I think the 3-4 pockets I just can talk about from an investment point of view.
Yeah. Thanks, Bhushan. Thanks for your points. Coming to Vishnu now, what are the white spaces do you see, and what are the areas of co-creation and innovation there?
Yeah, I think my co-panelists covered quite a lot of broad macro themes. So, in alignment with a lot of what he said, but let me pick up just a more specific India phenomenon, right? If you just think of infrastructure in India on top of which most fintech is built, I think that in itself has had tremendous pressure in terms of just sustenance, right? If you look at the last 10 years, I think India has scaled faster than any other country in the world in terms of digital transactions, whether that's on payments, whether that's maybe partly digital lending, insurance, and that puts pressure on systems, right? And what's more interesting is that India has had its own unique architecture when you think of UPI or account aggregator frameworks and the like. So I think as this is happening more and more, there's going to be an advent and a need for change. For example, your traditional Vision Plus, which is depended on by most banks, is not going to be as useful as credit on UPI picks up, right? On credit lines on UPI pickup. This is a micro example I'm giving in terms of how a lot of infra will need to go through change, and hence it's a very interesting and exciting time for founders to find those pockets of profit pools and then build for it. So while I think profitability is obviously very important and also a far-fetched dream for a lot of people, I think it's still very doable, because if you take a macro outlook now and see public markets, FS is still one of the largest contributors, right? And as this change happens over the next, say, 5-10 years, I think it's going to be entrepreneurs like the ones here and outside who are going to be building for that change. So generally speaking, I'm personally very excited about infrastructure, whether that's on payments, insurance, lending, and whether it's banks or other financial institutions. So yeah, a lot to see in the next 10 years.
Thanks. Let me come to Tessa now. From a Flipkart standpoint, what are the areas you see investment worthy? I mean, and given the fact that Flipkart is also into lending now in other aspects, insurance, what is the opportunity set for startups there?
It's a slightly interesting view for us, right? So we do a lot of stuff on the B2C fintech side. We do EMI, BNPL, we have a co-brand card that we've launched with Axis, but that's more on the B2C side. So we continue to remain very bullish on whatever we are doing on the B2C side on fintech. We've also been investors, to Vishnu's point, in the infra layer in Hyperface, which is a partner at the event today, in Finbox, because we fundamentally believe that infrastructure will continue to sort of be the pipes that help some of these fintechs, NBFCs sort of scale their businesses, right? So for me personally, I remain bullish across, I think, all the 4-5 pillars in fintech, be it in banking, which is how do you unlock very niche pockets within India that is new to credit customers, how do you sort of underwrite these customers better? In insurance, it could be how do you dynamically price some of these products? In wealth, for example, how do you leverage AI to make it more personalized in terms of how you're advising specific cohorts of customers, right? And even RegTech, you'll see all of these AI ML stacks that we've spoken about earlier in panels. How do you sort of get those to underwrite, risk mitigate, fraud detect, etc. better? So I think across the board, we remain very, very bullish on fintech, and it's a large part of where we are spending energies as Flipkart and more broadly as ventures as well.
Great. Let me come to
Joseph.
Joseph, right. I'm not able to get the name right. Yeah, Joseph, from Blume, Blume keeps on publishing great content, be it gaming or be it even climate, EVs and all. So from a Blume standpoint, what are the pockets of opportunity you see with respect to, let's say, gaming for that matter? Gaming was the recent blueprint which came out a couple of days ago. What are views on that?
No, so from a fintech point of view, I think there'll be three things that we have learned sort of investing in a range of companies, Slice, Turtlemint, to now, right? That probably helps those who are looking to invest or looking to build here. One is that India is a fairly unique market. We celebrate our DPIs, but the flip side of DPIs are that the harsh reality that the incentives that revenue pools generate is somewhat subdued, right? If you give payments for zero MDR on UPI, which Vishnu will talk a lot about if you want him to, then it'll stymie sort of innovation in payments. Similarly, the revenue pools sort of create innovation, and that is a challenge that founders should really think through while they're building in fintech, right? Because it's highly regulated. So that's the first thing. The second thing is a consumer behavior standpoint. India changes and it doesn't change. By that, what I mean is, we've got a new generation of investors who come into the market. You would expect an overwhelming number of them to, do goal-based investing, invest in mutual funds through very sort of safe means, but if you look at what they invest in, they sort of chase returns, go to the mutual funds that give you the highest returns with that risk. They go buy digital gold, right? Because that was the offline behavior. So it's the offline behavior that sort of moves online. And while in other geographies, what you see is when the economy is mature, the basket of assets change, a lot of behavior changes. In India, the same thing happens, but it happens on an online channel. So India changes and it doesn't change. That's, you know, one critical thing to really think about. It's almost like you can look at offline behavior and think how can you make it more efficient by going online than trying to sort of to get the customer to behave differently, right? That's number two. Number three is the corollary of point number one I mentioned is that because we've got very thin margin pools in most of these businesses, you've got to sort of be more innovative in terms of distribution, and you've got to be more innovative in terms of thinking through what use cases you can look at, right? For example, I was just having this conversation, you know, a few minutes before. In account aggregators, people still haven't figured out how to sort of make a profitable large entity, but you know, you have to look at second order things. You can't think of like a fee income normal business. You kind of have to look at second order things where you're validating people's income, validating people's behavior using account aggregator and using that as a hook for a product. Similarly, you know, you need to do distribution differently. You need to have more phygital distribution, so on and so forth, right? So India is a very unique market. It doesn't follow the playbook of other economies that have gone through the growth curve where the financial sector evolves in a certain way. We evolve differently because of DPIs and consumer behavior being different.
Coming to Anuradha, you being an early stage investor, and since there's a lot, the regulatory arbitrage is kind of being squeezed by the regulator. So what kind of opportunities early stage founders look at when it comes to maybe building rails or putting the next billion users online when it comes to commerce in general or fintech in general?
Yeah, so first of all, on your point of you know, investors demanding more profitability from founders, I think it's less about demanding profitability. It's more about not funding up in the air kind of ideas anymore. That's the shift we've seen in investor mindset. And same applies to fintech. And to your point of regulation, I think fintech is one area where no matter where you're operating, you cannot be insulated to regulatory changes. We've seen that across sectors, whether it is across sub-segments, whether it is lending or investech. Recently, there's been a lot of heat on investech players trying to position themselves as gamification of investment, right? So I think the regulator is in his own way trying to do the best for the ecosystem, but it does impact a lot of startups. So if you're building in the fintech space, you need to be agile in the sense that regulatory changes are occupational hazard and you have to be prepared for that. At Dexter, the kind of models, the kind of subsegments that really excite us, one thing that I think we as an ecosystem in India still haven't been able to solve for is access. So access both on the consumer lending side as well as on the business lending side, right? So we recently invested in a startup which basically does anchor-based lending, ties up with large distributors and lends to small retailers. It's a very good technique to underwrite loans because these distributors have huge amount of data around the repayments, the schedule of how they purchase from the distributor and how they deploy that, etc. So I think any player trying to build in fintech needs to come up with these innovative models either around customer acquisition or around underwriting or around like embedded finance, right? We were just talking to a player today, a founder who's trying to build personal lending for Bharat. But he's trying to do it by becoming an embedded player into popular apps that Bharat uses. Even in tier 2, tier 3 cities today, Zomato, and these Zepto, etc., are still penetrating, but these apps which are popular in these pockets like Myntra or Amazon, how can you be present there when they need a prepaid card, let's say, right? So I think we are excited about those white spaces where the broad challenges are still not been able to, have still not been solved, and founders are trying to take a fresh approach to it rather than going the same way of we'll do Google ads, we'll do FB ads, and we'll acquire users and then we'll sell them fintech products. Also, I think embedded finance solves the problem of intimidation that financial products create in the mind of user. Like if you'll approach a consumer and say that I want to send you a loan, or you come across as a desperate player and you intimidate the consumer. And if you're present on an app that they already trust. So embedded finance, I think, solves for that challenge. So these are some areas that we are quite excited about.
So from now on, I would like to focus on, the elephant in the room, the MSME credit finance gap. So it runs into billions. And this is where there's a lot of talk about using disruptive technologies like, say, AI-led credit underwriting assistant. But there's also a lot of, I would say, heat from the regulator in terms of being rational with the AI-based credit models. And this is where I would like to put this question to Shahan and Vivek. What are your views on AI-led credit assessments when it comes to underwriting credit for MSMEs or the NPAs of credit models, right? There have been reports that the NPAs for AI-based credit underwriting has gone higher. So what are your views? Is it a sustainable thing to do, or what can be done in a better way?
Yeah, my personal view is that the world that we are seeing right now is a slightly exaggerated situation where everything is very hunky-dory. And if you see the data points over the last 3 months, the debt levels in the country is going up. And I interact with a lot of founders as my customers in our financial planning app, plus the family office side. So at this stage, of course, the NPA levels are well under control. But my sense is over the next 2-3 years, there will be a period of time where there will be some credit events which could have a cascading impact. But the bubble will become bigger in my mind over the next 2-3 years because the corporate bond market is expanding very rapidly. With the advent of online bond platforms, SEBI has just released the regulations and I think people are coming out. A lot of individuals are yet to invest rapidly in bonds, but with the involvement of these platforms, if the equity markets fall at some point of time or become depressed for even a few months, then you would see people flock to these corporate bonds. Unfortunately, there is very little literature on corporate bonds as to how it works. Equity literature is very freely available on media everywhere. But debt investments is something which is very difficult to find, and people have not witnessed. My own personal view is that debt is more riskier than equity. And we have seen it in the past with Ireland FS and a lot of other credit events where people lose the entire capital. And my sense is over the next 2-3 years, until we reach this bursting of the bubble, MSME credit will expand a lot. I don't think the NPA situation is bad as of now, but I think the situation will worsen at some point of time. And from an individual perspective or retail perspective, it could be a very new world for people, where they will experience big losses on that side. That's on the retail investor side, but on the MSME side, I think cost of capital will surely come down over the next few years as access to capital through individual sources become much stronger.
Shahan, your views on AI-based credit assessments?
I think my panelists has summed it all. So I think this is a long panel. Happy to answer any other question.
Okay, so let me put this in this way. So there's a lot of flight of capital from, let's say, savings to speculation. When I say savings to speculation, there's a dip in savings, but there are people who are flocking to online platforms, as Vivek rightly said, and making investments. So do you see there's an opportunity there as well for startups to help retail investors make the right decisions by using algorithms and other emerging technologies, the use of GenAI and all?
So I think I'll start off by saying all the sort of key terms that you mentioned in this question. I think if an investor is going after a fad, they've missed the bus. Number two, in terms of retail investors taking financial decisions, I think today investors want convenience, and which is where the embedded play really works out in the India story, because yes, they want to invest, but they also want it gamified. Number three, in terms of guiding Gen Z, as you might call it, I think today's investors far more informed, far more research driven. They might not read a brokerage report in terms of which stock to buy, but I think a digital broker or say gamified sort of stockbroking apps are helping out. As far as investor capital being funneled into such startups, I think there's a clear gray area there as per SEBI. So I think many of the fund structures that are sitting here do have foreign capital, and I think that differs from fund to fund. Okay. I hope that answers.
Yes, thank you. Let me come back to MSME piece again, and this is where I will bring Shrikant in. So you have an MSME intelligence platform. How do you see adoption of these tools when it comes to offering credit to MSMEs?
So let me start with, one of the conversations was about we've solved for NPA, right? I mean, there are two types of problems any lender has to solve. One is the NPA problem, and the second is efficiency problem from the growth perspective, right? And most of the lenders are extremely fascinated, and this is the whole journey about public sector bank, private sector bank, NBFCs and the fintechs, right? So if you go from right to left, you see that the affinity for solving for NPA is much higher, and then it kind of goes, efficiency goes from right to left, right? That's the focus. But still, nobody is compromising on NPAs, right? And nobody is trying to say, hey, my business model, I'm okay with this NPA, I'll go ahead and do this, right? And I'm not talking about the personal finance, which is the subprime, the smaller 50,000 role. But in the SME segment, largely what you will see that there is a tremendous opportunity, and just to put the context to the numbers, globally, there is around $10 trillion of gap in the SME, finance, access to finance, underserved or unserved SMEs. And in India, it could be at least $1 trillion, right? And whatever we do in terms of, the capabilities which banks, financial institutions do, we have to draw the line ahead to say, hey, I have solved the NPA problem, right, which is fantastic. But can I convert it into an efficiency solution, which is also going to give me an opportunity to scale, not just say, hey, I'm very happy with NPA problem, and then most of the stuff is done manually. And, again, there is a trap. I can tell you that we have been, working with some of the SME lenders, even on the fintech side. The cost of just rejecting, so the business rule engine, assuming that 50-60% rejections happen through the business rule engine, the cost of that is 3,000 to 5,000 rupees just to reject. I'm talking about small, medium enterprises, not the micro ones. And then when you go further to maybe 1:5 or 1:10 selection, which happens, so the companies which are selected or given loan draw the burden of that, and there is also human cost which comes out. So we need to really solve for efficiency at this stage for the SME lending scenario and growth, coming out of that, because there is a huge opportunity which we need to convert. So now how do we solve this, right? I mean, we can't solve this by throwing more people at it, right? Creating more contact centers. We have to take leverage of technology. And, while it sounds, I just want to differentiate the AI, the Gen AI versus, the lot of noise about Gen AI versus the predictive AI. The predictive AI has been here for 25 years, right? I did 20 years ago, more than that, I did my engineering, and then that time I actually did artificial neural network as one of my projects to predict how much electricity should be generated in one of the regions in India, because electricity could not be stored. So this is not new. Predictive AI is not new, and we should not be scared about it. But we really need to be differentiating between that. Hey, predictive AI can become a co-pilot or an assistant across the life cycle of an SME evaluation journey. Maybe it is in the lead management, where you don't need to put in a lot of effort to eliminate companies. You don't need, when you do credit assessments, you can be more accurate, more detailed about collecting a lot of non-financial alternate data and making decisions on those, because financial data has certain value. Beyond that, it may not help you in decision making. That's what our models say. And then also in portfolio management and collections. So there is tremendous opportunity in terms of building the predictive AI into this journey of lending. And that's the way to solve the problem, because efficiency problem cannot be solved by just training people on data which they have not seen, and thousands of parameters which machine can learn. Credit officers cannot learn that, right? That's the trend I see going forward.
It's thrown out so many number, almost around 8,000 of 9,000 crore transactions happens every year now on UPI. That itself is giving you so much of insights about what is the spending patterns, how people are spending, what is their daily needs, what is their financial needs, how they are handling that thing. That is itself is throwing up so much of information. On the same lines now, EdTech is coming up, the educational technology sector, which is also coming up, which is also creating so much of information about what is happening, how the skills are getting generated, how the next layer of talents are coming up. So everything is coming up now. Now, analyzing that data and creating right policies is, I think, going to be the most important area where government is going to invest. So analytics is going to be the most important thing. And when you talk about analytics, another aspect which comes is artificial intelligence and machine learning. Now, that is going to have a lot of impact. The reason why I would say that, unlike the corporate sector, which primarily deals with well-educated, well-literate individuals who understand the system, who understands how to operate a system, and they can be very suave in their interactions. When government interacts, it interacts with everyone. You may have digitally illiterate, you may have financially illiterate, and somebody may be really illiterate in every form. So now you have to interact with them. Now what we see is that AI has the potential to bridge that gap. Now it's actually replacing that human interaction where you required a human being to come up and assist you in understanding how I should avail a government program or how I should take a benefit from the government. Now that is getting transformed. People to government interactions are more and more will be getting managed using AI. That will be a big change which you will be seeing in due course. And
you'll be able to blame everything on AI.
At least I can tell you
my WhatsApp was blocked for no, and because of what I do, I know the bosses. They tell me it's AI. So anything you can blame it on AI, so not natural stupidity on artificial intelligence.
Other way of looking at it is that if you end up paying bribe, then you can also blame it on AI. So that is.
I hope you're not talking about me.
Not about you, but about the ecosystem.
You're telling me that.
So in a serious note, that AI, whenever there's a human interaction, there are human emotions involved. And then when human emotions are involved, there's always a chance of bribery, corruption, everything is going to happen there. When you replace it with an unemotional systems like AI, you are actually able to cut out that middleman layer, which will simplify your interaction.
Like you gave the example of property paper registration.
Correct.
In Delhi, I can tell you there are middlemen who procure the stamp paper early, or to pay them.
Yes.
They will get. So, clearly,
absolutely,
it democratizes it for everyone.
Absolutely.
Gives everyone a fair chance, saves the time rather than the whole day. So there are advantages.
Correct.
There are less disadvantages and more advantages.
So information gap is what people leverage. The middleman leverages that information gap, which you don't have, that person has. And he leverages it for his financial benefit. That is where AI will help you to bridge that gap.
Brilliant. We have Mr. Bhattacharya with us. We can get one or two questions. Any questions for Mr. Bhattacharya? Anybody has a question? The gentleman here, can we get him a mic? Tell us your name, ask a short question, share your Swiss bank account number with us, privately with me.
Hello, sir. This is Akshat Logar. I work for VFin. One of the very important initiatives that you touched upon was the prediction of how many students or what is the skill set that you are going to get on a futurely basis. So is this feedback from initiatives of this sort going to the industry also? Let's say we hear India is taking huge strides in terms of investment into semiconductor industry, and we see it on a daily basis that there is a skill shortage from the corresponding skill set required for us to grow. So is that feedback loop going back into industry and then maybe getting on right initiatives to actually encourage people to take up such pieces where we would require the skill set in future?
By the way, he said, because there is such information available, we are creating a bridge or intend to create a bridge. Okay. That's what he said.
Yeah, that is also one part. But yes, we have an open data policy now. Like when we learned from the players in the system, we realized that creating data and providing it free of cost to public can actually help in innovation. So we have an open data policy in Karnataka, and other states in the national government anyway has it. State of Karnataka has it. We have a portal called Mahiti Khanaja, where what we are trying to do is that we are allowing people to come and use such information. Not every information, because some of the information is still sensitive. And it also depends upon how we decide to reveal that information through open portals. But there is a mechanism through which you can access the information and utilize it for developing your solutions around it. But yes, if you say that whether government has played a proactive role, no, I would say we haven't. We have to take those steps. That's a very positive, that's a good point which is coming out of this discussion, and thanks to your suggestion. That yes, we have to take that step. We have to go forward and invite industry and the players and the startups to come and start utilizing this data to create newer services.
Thank you so much. We're out of time. We'd like to keep it to time. So please give Mr. Saurabh Bhattacharya a big round of applause and for being specific and giving us used cases for whatever he's doing and for being candid about what happens in real life. And I must say you're a very good anchor, except I can say that because I do go to 20, 30 events in a month. So please give our anchor a big round of applause. He's overall very good, and that was a small point I made. Like PR people call me, some very young. The youngest was 19 years old. Called me one day and said, "Anurag, will you come for the press conference?" So when I was younger, I used to get very upset. Right? I'm still very young, so I told him I will. If you pay me $5 million, I'll show up. Right? And then I sent him a long test. I asked him how much his age was. He said 19, going on 20. So I said, if you don't know people and they're older, please seek. So, it's a small advice. And can I tell you, people who talk to me like, they don't know me and they call me Anurag, I either don't respond or it's a very cold response. So how you address someone, whatever energy you send. If you know me well, you can call me anything, right?
Absolutely, sir.
You call me Al also, but Mr. Bhattacharya, okay? Please give Mr. Bhattacharya a big round of applause. And our anchor is overall doing. And yesterday, the anchor we had a facility management. She was calling people by first name. Very senior people, and I had to request her to call them warmly. Yeah?
No, sir, I actually did this on purpose. I was just checking if you're concentrating and if you can give me some.
Thank you. I am. Now, I eat almonds in the morning and even on the Indigo flight. Thank you.
Absolutely. Could we have a huge round of applause for both gentlemen right here? Come on, everybody. For Mr. Saurabh Bhattacharya and Dr. Anurag Batra. And sir, we request you to stay back as we have a small gratification. Again, our gifting partner clinically has a gift hamper, and we request Dr. Anurag Batra to please do the honors. Come on, we can put our hands together. And now, ladies and gentlemen, I take this opportunity to introduce the second panel discussion that we have right here. It's about credit evolution, leveraging big data for smarter lending decisions. And this is going to be moderated by Dr. Jasmine Gupta, Chief Digital Officer, Patil Finance, and founder, Me It Money. Could we have a round of applause? Let's welcome Dr. Jasmine Gupta, Chief Digital Officer once again, the session chair and moderator. And the panelists, first up, Mr. Prithvish Ray, Chief Business Officer, Hyperface. Mr. Arindam Das Gupta, Interim Chief Program Officer and Director, Innovation in Digital Finance, Grameen Foundation for Social Impact. This is where we put our hands together. Come on, everybody, let's welcome our panelists. This one is the second bit. And also joining, Mr. Nitin Sharma, Chief Operating Officer from PayMe, who could not make it on time right here. And also moving forward, we have Ms. Kalpana Ajayan, Regional Head, South Asia Women's World Banking, and Mr. Gaurav Goel, National Head, Startup Fintech and New Economy Business, Yes Bank. And also we have with us Mr. Suhail Khan, Senior Director of Business from Bharat Pay. Come on, everybody, put your hands together for the panelists right here. This is panel discussion number 2. And over to the session chair.
Impact of enabling DPI. But they're much wiser when it comes to AAM, right? So that will have its own challenges in terms of scaling up. And look, I think the thought process that in economics, there's this thing called Say's law, right? Supply creates its own demand. If you just create supply, it's not necessary. That's not true. That's like sort of classical economics. So that the harsh reality is we have to look at problems where there's still sort of deep pools of demand and just trying to build on top of things where, because there's access and supply of these infrastructure, that's where the exciting problems are. I don't agree to that at all. And if you look at the hard problems, I think India has lot was said about credit. India has a very lopsided credit market, right? If you look at our credit sort of expansion over time, most economies, the single biggest driver of credit creation is mortgages. India's to mortgage to GDP ratio is 10%, right? China has 18%. I think most of the OECD countries are above 50%. The US is close to 100%, right? So our credit creation is not driven by securitized credit. Instead, it's by unsecured credit, right? And the hard problems to solve is to go solve for the underwriting of mortgages and the scaling up of mortgage distribution in a digital and effective way. And for that, a lot of regulatory changes might also need to happen. But that's one area, for example. The second, I'd say, is reacting to your earlier question on wealth. I think India created access to financial investments before it created access to financial literacy, right? So the hard problem around literacy, how do you solve for that? What's the right way to build literacy into a lot of our financial flows, right? Into a lot of the sort of operational flows and a lot of fintech apps and so on and so forth. That might be interesting. How do you sort of engage on that? So I think there's a lot to be done on the hard problems, which is still underserved. And I'm not so excited about trying to ride the next wave because the new DPI is coming. I think you kind of have to wait. The harsh realities, the biggest beneficiaries of UPI was Walmart, Google, and very well capitalized Paytm, right? So will a really small startup be the best way to engage on a DPI is a question that I haven't fully answered to myself in the affirmative.
One last question on ONDC and open finance, because the next promise of ONDC is they're moving towards open finance, where insurance, mutual funds, and other players are also coming on board. So Anuradha, coming to you, I mean, do you see opportunity for startups over there, and do you see that as an investment-worthy pocket?
Before I answer that question, 2 things I wanted to add. So he talked about financial literacy, and we were just today discussing how a lot of good fintech apps, if you go to the Google Play Store and you look at their ratings and reviews, surprisingly, we all use them, we all trust them, we know they're good quality, but still you'll find a lot of 1-star ratings on those apps. And the primary reason, like he pointed out, financial literacy, educating consumers about how this works and what are the problems you can run into, are still missing. And money is such a personal, such a possessive issue for people that even a slight if things go off just even slightly, people are very quick to voice their opinion on how bad their experience was. So completely resonate with that. On the ONDC piece, we've looked at multiple players in ONDC, mostly everybody's fledgling startups. There are players who are trying to, like Tessa mentioned, trying to onboard sellers. One interesting player I met in this space told me that everybody is saying we are onboarding sellers, we're onboarding sellers. It's okay, you'll onboard sellers. They'll come to ONDC platform. But if they're not getting any transactions happening on ONDC, it's useless, it's worthless. So that particular startup is using his distribution channel to make sure that these people get hyper-local transactions activated and they start seeing traction and ONDC becomes a platform of choice. But I have my reservations on the approach that he's taking because a very small player putting so much dollars into distribution at this point. But what I'm trying to say is, I totally agree with Bhushan that for anything to fly off the ground, it needs big dollars behind it. Somebody's huge conviction to build distribution for that. ONDC as a protocol, is tremendously, potent. And at least I am extremely positive on it, and I believe that it's only time before it picks up. Like you mentioned rightly, multiple other things open up via ONDC. It's an open platform. But you cannot be optimistic about seeing those things taking off in the next 1 year or 1.5 years or 2 years. It might take 4 years or 5 years. But whenever it picks up, I think it's going to create a revolution.
So we have close to 10 minutes left. We'll open this panel for Q&A. But before I do that, I will put one question on generative AI because it's impossible to conclude any conversation without including generative AI. So there's a lot of buzz and momentum about generative AI. The government is putting huge amount of money in creating same population scale DPI for AI. But do you see a tangible or immediate impact these generative AI startups can create in the fintech sector, especially in the areas of fraud prevention, fraud detection? Vivek, your views on that, and Shahan can come in.
One thing I feel, maybe not on the fraud, maybe I'm not very appropriate to comment on that, but generative AI on InvestTech, I think over the next 5-7 years, will create a big impact on the emotional aspects of it. So for example, right now, if you see someone who's managing money for individuals, they need a human in front of you, especially when markets fall or during bad periods of time. So I think generative AI during such periods of time to give an experience closer to a human being is where it'll play a big part. Apart from that, I think in terms of mathematical numbers predicting how the markets will be, my personal belief is that there have been a lot of wizards who have tried to do that, but it's failed. So I don't think generative AI will be any different. But yeah, on the emotional aspects, I think it will play a big part in future where, let's say, in a bank or in a InvestTech app, a relationship manager can today manage 100 accounts. In future, with the help of AI, they can manage 500,000 accounts. So that, I think, will be the big change where the human cost will come down because of this.
I think what will help is more in terms of RegTech, because in today's times, all of us get so many calls which are sort of spams. And regardless of how many times you sort of put them on the block list, they somehow figure a way to reach out to you. So that's a use case which impacts everybody, whether you're top 10%, 1%, as long as you have a mobile device, it'll impact you, right? So I think that's a clear-cut use case. We are seeing a lot of plays which are sort of embedding themselves in the banking infrastructure, and I think that's a use case there. I think retail finance has seen a lot of innovation, but what hasn't is wholesale banking. And we are seeing a lot of plays being built out there, and maybe we can talk about that in the next panel. So yeah, thank you.
Thank you. So we have close to 8 minutes left, so open for Q&A. If anyone have any questions, please feel free to speak up. If there are no questions, then maybe we can conclude with maybe 1 minute closing remarks from all of you, starting from Vivek.
So my personal belief is that next 5 years, because of account aggregator, and there are certain issues there, I think Joseph mentioned. I think over the next 2-3 years, a lot of these things will get sorted out. Two big issues in account aggregator. One is the banking systems are not evolved to take on the load which is being put on them. Second is very simple thing like the narration of each transaction. Problem is each bank has different narrations for each expense transaction, etc. So it's very difficult to, so the accuracy level of systems to accurately predict the expenses is 60-70%, possibly lower. You take the exact numbers. But I think these are initial troubles which will get sorted over the next 2-3 years. Over the next 5-10 years, the way all of us invest and borrow, I think, will change drastically. And three things because of which it will happen. One is regulatory changes like account aggregator. Second is digitization. And third is the amount of money which is there in people's hands. Structurally, I think the government wants people to spend, which is very clear by the income tax regulations that have come in, where more money is being put in people's hands by the new tax regime. The old tax regime, I think, will be slowly staggered away. So I think very interesting times, next 5-10 years, but very difficult to predict. But yeah, change will be very significant. Thanks.
I wouldn't crystal gaze here, but what I would say is I represent a Japanese fund. Contrarian to investors which are looking for $1 billion outcome, we recognize that there's Bharat and there's India. And it's okay to have a $300 million outcome or a $500 million outcome. And if there are any entrepreneurs in the room, more than happy to chat post this. And we do early stage seed checks all the way to Series A, so happy to chat.
Love the plug he's made here. I'll reiterate my point once again. A lot of access that needs to be solved. AI, ML, any kind of cutting edge technology is just a tool in our hands. How do we solve for the broader problem statements? Using them depends upon us. One quick example, using account aggregator framework, you get so much data. In collections, at least you can determine whether there is a problem of willingness to pay or capability to pay. And you can channelize your collection efforts accordingly. But all those things, again, give you tools to solve problems. Humans are not going anywhere. Technology cannot replace us in the near term. And we just need to use them, put them to the right use.
Yeah, I think a couple of things, right? One, I think I mentioned a lot of the critical pieces around how I think of the Indian market. But I think just in terms of being able to say in AA, there's still potential, right? And these things do tend to have a slow ramp up when there's the incentive pools are not deep. But I think the unlock will happen when real innovation comes into the ecosystem. And for real innovation to come in, you need to make the barrier of licensing to get into AA sufficiently low so that you don't need to go get an RI. I mean, you could do it with PFRD license earlier. Now you need an RI license. So I think opening up the field to innovative ideas will require a rethink from a regulatory standpoint in terms of who can come in. And I think one example the other day, I met a company and really thinking of the second order things that AA can unlock, and was saying, look, there are these matrimonial websites. Everyone will put their salary as higher than it actually is. So what if you could use AA to do like a little verified badge? That's a uniquely Indian and good solution. And things like that, I think, will likely to emerge out of AA. That's what, and I think the easy things are not there, or it will be taken by the large players. So you've got to look at either second order things, or you have to go after solving the hard problems in the Indian ecosystem, whether that's mortgages, whether that's financial literacy, things like that. And I think that's what is exciting about this, next phase, right? We are on the top of credit cycle. Everything looks good because we are on the top of that cycle. Even the RBI recognized that, and that's why the weights on unsecured has changed, right? And you can lend and everybody's NPA is low. Numbers are all looking great, but good times don't last forever. And so then you kind of have to think of counter-cyclically, when the cycle goes down, what makes sense? If you're on collections tech, if you're on things like that, that's probably what's interesting, right? At the peak of optimism is when you need to start becoming a pessimist.
I think I might have seen that company as well on the inside. No, but I think fintech obviously has seen a lot of action in the last couple of years, and you've seen some stellar companies sort of come out of the last cycle in fintech, right? I think I'm more excited about the unsexy problems in fintech. And that could mean, to Joseph's point, on the collection side, on the regulatory compliance side, or on the underwriting stack, people doing that differently. So I think that's what we remain more bullish on going forward. And similar to what Shan said, if there are any founders in the group, happy to sort of speak after. Thank you.
Now I feel bad.
I think we have a minute left, so all I'm going to say is I hope the next few fintech IPOs work out. That's about it. But on a serious note, I think while everyone here has actually said regulations have maybe dampened innovation in some sense, I actually believe from a long-term perspective they've helped, and we'll see the next wave of growth stage fintech companies, not the early stage ones, the growth ones who've actually done a good job in adopting these, who will then sort of build very resilient businesses over the next 5-10 years. And maybe 5 years out, as the folks sit on these chairs, they'll actually look back and say, hey, maybe that was not such a bad call. So looking forward to some of that happening.
So quickly, I think one interesting thing about fintech itself, right? Everybody needs money. Everybody wants money. So the opportunity is immense, and it is not going to go away. It might change the form from note to a digital currency or something, but it's everybody's problem or likelihood. So the opportunities are immense. Second, I would touch upon this entire goal of economy, right? What like we call it as Amrut Kal of 2047. Economy will go from 3 to 30 trillion dollars. Even if it goes to 10, these are opportunities which people do not get, right? If you look at last 78 years of 80 years of Indian, maybe after independence, this kind of shifts, they don't get a pocket of opportunity when trillions of dollars go 3x, right? And I think touching upon very at a micro level, a lot of this would happen through credit. And I think some of the panelists have definitely said. So credit definitely is going to be a very interesting opportunity across the board in various forms. Second thing I also feel is this entire format changes, right? No, most of the people who are here, most of our kids are not going to go to bank. They are not going to have products the way we have consumed. So there is also a shift which is going to happen. So I think if you look at a lot of these large opportunities, decadal opportunities or millennial opportunities, whatever it is going to be, I think India will offer that pocket to kind of innovate and build new things. And I think if you align with certain policies, etc., it's far and much easier, where the regulators are also going to be more friendly to you versus coming behind if you're going to go a little sideways, right? So that's my couple of points connecting the economy.
So I'll go with what Anuradha said. You know, one of the points was about customer focus, and we really need to make sure that any solutions we are bringing to the market are solving certain type of problems. They are scalable, they are efficiently, you know, there is a business case. So every time we kind of talk to some of the lenders, we basically say, hey, you know, this is the business case, this is the amount of money you'll save, this is the kind of NP you will do. So one thing is very, very important. The second part, I would say that, you know, all of us know that while internet was created and we talk about a lot of DPI, one layer is missing. I don't know who. Can somebody find out? Can somebody tell me what layer is missing in internet? That the trust layer is missing. That, you know, anybody who I connect or any company which I connect to, I cannot simply trust that, right? So that is something we need to solve for. And, you know, it can be, I mean, we don't need blockchain to solve it. You know, by having the right level of intelligence about those companies, we will be able to solve that, right? So the idea is bringing all of these together. And the third one, which is very important, is the regulation. We should not ignore. Today, one of the challenges fintechs are facing, I keep bringing it. I mean, we spent a lot of time in Singapore, but in India, if there is a way for which engaging fintech, and RBI is doing a lot about it, but engaging fintech in a format with fintech know in advance that, you know, hey, this is working, this is not working. So these are the three things I would say would really help us scale up to the next level.
Thanks, Shrikant. In fact, you rightly pointed about the regulatory piece, right? And hopefully the SROs, the self-regulatory organizations, will provide that platform for fintechs to engage with regulators in a more formal and constructive way. So with this, I will conclude today's conversation. Thank you, everyone, and thank all the panelists for sharing the insights. Thank you.